Southern Europe's still playing a little bit of catch-up. I also think that we're not just looking at logistics per se, but the lower end, which I'm going to call light industrial, which I'm going to bring into the conversation. And I still think that there's growth in that light industrial market, particularly even older buildings that need refurbishment, provided the locations are really central. Where it's possible, light industrial development, and we're seeing a number of bits and pieces around London, as these other occupiers have been squeezed out with the new residential development. And I think there's growth happening there, both on the rent side, which we're actually seeing rents going up, one of the few places around Europe where that's actually really happening. And Northern Europe generally is still looked at as a good powerhouse. And as we've all said, looking at the e-commerce, the driver, it's increasing in its importance. They need more product, so eventually, demand-led, it will start pushing up values.
Okay, good. Ingo, what's your sort of pick of the countries and the regions?
Pretty much the same what Tristram said. But anyway, I think there's still strong demand for Western Europe and all the developed countries where there's strong demand, strong occupiers, and still good values, and there's still a lot of growth possible. On the other hand, CEE, definitely Poland, Slovakia, Czech Republic, upcoming countries, I think also there will be good deals possible. The Nordics as well, I think there's growth potential and potential for investment. But taking on that, what Tristram's saying, what we saw on the turnover numbers in Germany, 4 billion, out of 4 billion euros of turnover, there's 800 million investment into logistics, into light industrial, as we say, business parks. So I think this is a little bit of an undiscovered sector. Due to the fact it's in good locations, former manufacturing, planning, permission available. I think there's still a growing business there. So core logistics, yes, but as Kristof said, this is becoming crazily expensive. Bidding scenarios, a lot of investors trying to bid and ending up number 3rd in the row or number 10 in the row. And to be honest, if you look the big ones like Goodman's and Prologis, they all have their own funds, which means JV partners. So if you see a BMW logistics center close to Munich, developed by Prologis, we all from the broker side would love to sell it. Not possible, goes into their own fund. So therefore, I think it will be a little bit of selective properties on the market on the core logistics side, but more to come maybe on the light industrial side, where you can buy land, where you buy planning permission, and where you buy whatever, 50% of cash flow, and then we develop it later on. So examples like Sigro, close to Frankfurt, Gaisley is just small examples of that.
Okay, good.
Yes, I'm very positive when it comes to development. I think exactly for the reasons that Ingo just said. If you can't buy it on the market, or it isn't for sale, or it isn't available, or it's too expensive, one of the better ways to access the market is by developing. And you can actually manage the development risks very, very well and get to a pretty good risk-adjusted return by doing development. From a geographical point of view, I think I'm very excited about France, Spain, and Italy. Just because, and this is getting back to the mega trends, there's a lot of people living in very big cities. So it has urbanization, it has e-commerce, and for a fairly long period it has been quiet. And at some point, all these projects that have been postponed or that haven't happened in the last couple of years need to come through. Vacancy levels are reducing. What is left is mostly older buildings. So I think we're just about at the point where we're going to see a lot of activity in France, Spain, and Italy, much more than you had in the last couple of years. We've had something like this in the Netherlands that was very quiet until 2013 and suddenly went through all its vacancy and became one of the most active development markets over the last 2 years with lots of mega sheds, lots of new investment. So my bet is on Southern Europe.
Okay, interesting. Logan, what's your...
Yeah, thanks, and good comments. Listening to you all, for sure I would put development on the list for exactly the reasons you described. I also think that there remain very attractive opportunities on the acquisition side. And specifically, I would look for buildings that are generally functional, are in a good location relative to population and transportation links, and you can acquire them at a sensible basis relative to replacement cost, potentially above, but a sensible basis. I would not necessarily pick a geography that I say is better. I think if you can check those 3 boxes, there's only so wrong you're going to go in logistics. I also wouldn't even pick a cap rate necessarily. Cap rate's important, of course, but there's a whole conversation we could have about what's cap rate, what market, what's the effective levered yields, et cetera. That's great. Obviously, there's an important part of the conversation as well. It's different for different types of assets. But first, I think I would look at the real estate itself, and I think if you can get those boxes checked on the acquisition side, it's probably a pretty good deal.